On the Origins of Money and the Development of the Modern Financial System by L. Randall Wray. Primitive Exchange and Primitive Money. The orthodox explanation of the origins of money is based on the existence of an economy based on barter exchange in formal markets, the fairground barter, which predates the introduction of money. But this is neither historically accurate nor is it coherent. Footnote 12. It must be admitted that we will never have sufficient historical data on the origins of money that we can settle the issue merely on the basis of historical facts. Any analysis of the origins of money will necessarily rely to some extent on historical speculation. Thus, my criticism of Samuelson's approach is not merely that his interpretation relies on speculation, nor is it that his interpretation conflicts with some of the historical facts. Rather, the primary problem with the orthodox story is that it is illogical, and that it conflicts with our understanding of the operation of a monetary economy. Thus, I will present an alternative interpretation of the origins of money and monetary production that is consistent with the few historical facts available, but which is also consistent with my explicitly post-Keynesian understanding of money and of monetary production. I also want to emphasize my indebtedness to Heinsohn and Steiger, whose work greatly influenced my view on the origins of money and my view that money has always been endogenous. End footnote. The institutional prerequisites to the development of market exchange include the existence of private, alienable property, recognition of individual responsibility, self-interested behavior, and forward-looking production. Yet the historical examples of barter exchange used to justify the traditional approach show none of these characteristics. I will argue first that primitive exchange or barter did not lead to the development of markets. Second, that money did not develop out of primitive exchange. Third, that credit money predated commodity money and government money. And fourth, that the quantity of credit money has never been constrained by the quantity of central bank liabilities as in the multiplier story. Footnote 13. I will use the term credit money to denote privately created money-denominated liabilities that fulfill the functions of money. These should not be confused with money itself. See the discussion that follows. End footnote. The exchanges that occur in tribal societies are public acts performed in regard to the status of persons and other self-propelling things. These exchanges have as their main aim to exchange articles which are of no practical use. Sometimes the identically same object is exchanged back and forth between the partners. The sole purpose of the exchange is to draw relationships closer by strengthening the ties of reciprocity, prolianie. Exchanges are frequently made to equalize wealth, rather than to achieve mutually beneficial allocations of resources, and there was generally no fixed exchange rate among exchanged goods. The exchange rates would depend upon the status of the parties to the exchange. Footnote 14. See Ray 1990, pages 6 to 9, for a detailed critique of the orthodox notion that primitive, that is, pre-private property societies used money. See also Heinsohn and Steiger, 1983. End footnote. If these exchanges were not market exchanges, then what are the primitive monies? Samuelson's tobacco, huge rocks, and wives, that have been identified as being the cost-reducing solution to barter exchange. These primitive monies are used to create social relationships, prevent group hostility and warfare, elevate one's political position, and restore peaceful social relationships between persons and groups disrupted by conflict. Dalton, 1982. These monies are always used in special ways only, and never as a social unit of account. These special purpose monies or highly ranked treasure items necessary to the transaction may be used only in specific ways, and other items cannot be substituted for them in these specified transactions. Dalton, 1967. These monies did not function as media of commercial exchange. They did not function as common measures of value. They did not act as the standard of deferred payment, and they most certainly did not carry liquidity premia in excess of carrying costs. Malinowski's study of the Trobrianders found, quote, "It is obvious at once that in economic conditions such as obtained among the Trobrianders there can be no question of a standard of deferred payments, as payments are never deferred. In fact, the narrow range of exchangeable articles and the inertia of custom leave no room for any free exchange, in which there would be a need for comparing a number of articles by means of a common measure. Still less is there a need for a medium of exchange, since whenever something changes hands, it does so because the barterers directly require the other article." End quote. Similarly, while loans existed in primitive non-monetary societies, these were fundamentally different from the forward contracts that characterized loans in monetary economies. First, in a primitive society, loans are always initiated by the lender, who forces the debtor to accept a gift. Second, this loan is not undertaken by the lender with the prospect of material gain, for the chief motive is to obtain prestige precisely by destroying one's wealth. Third, in primitive societies, repayment terms of a loan are always fixed by social norms of reciprocity and redistribution. They are never the result of private negotiation and contract. Thus, in primitive societies, neither money nor loans represent economic phenomena. Rather, the purpose of these is identical to the purpose of primitive exchange, to reproduce tribal society through reciprocity and redistribution. On the basis of historical and anthropological evidence, it can thus be concluded that primitive barter exchange was not market exchange without money, and that the primitive monies do not emerge from the reduction of transaction costs in the exchange process. Dalton, 1982, prefers to substitute the term primitive valuables for primitive monies in analysis of most primitive societies, since, demonstrably, most were not crude proxies for dollars or francs in simple market transactions. While these may have served as special means of commercial or non-commercial payment or exchange in primitive, peasant, and archaic societies all over the world, they are regarded as valuables to be used in special ways only. They are necessary means of reciprocal payment in social and political transactions. This does not mean that individuals in tribal society are completely lacking in self-interested behavior. Rather, that such behavior would not normally be manifested in exchange for two reasons. First, since the community takes care of all its members, gainful behavior in exchange is not necessary to provide a livelihood. Second, reciprocity exerts continual pressure to eliminate self-interest from exchange, since it cannot benefit the individual. Footnote 15. Thus, self-interested behavior must be non-economic. It must be displayed in behavior unrelated to the production and distribution of society's means of livelihood. In tribal society, economic activity cannot be gain-oriented at the individual level. Pursuit of gain through exchange is the result of institutionally enforced patterns of behavior that arise with the development of private property, as will be discussed below. In tribal society, there is no well-conceived concept of the individual separate from membership in the clan. As such, all individual responsibility was social. End footnote. Clearly, such exchanges do not conform to the orthodox view of profit-seeking market behavior, but represent conventional behavior more akin to the Western practice of gift-giving at Christmas. Footnote 16. Thus, I would define primitive exchange as non-economic behavior, having next to nothing to do with self-interested behavior. Rather, such exchange was a component of reciprocal and redistributive arrangements, designed to reproduce tribal society, and not a step on the road to the revolution that replaced tribal society with a monetary economy. C. Dalton, 1967 and 1982. Tribal exchange is an outgrowth of the institution of hospitality, rather than an expression of selfishness.